Hello, welcome back to Monica Pay. Aiman here. Okay, so let's take a look at the S&P 500 first. So the index declined by 0.28% on Wednesday's session as severe geopolitical tension reemerged after the US President Trump raised up about the temporary truce with Iran, stating that the ceasefire was over. So the resulting spike in the crude oil price also uh, you know, stoke the immediate inflation fears and also dragged the index down as much as 1.1% intraday through a powerful lead. The rally in the mega cap AI like Nvidia and also the Broadcom successfully buffered the worst of the sell-off. So the index right now of the S&P 500 is resting above the 50-day SMA line, which gave the index the support if the bullish move to occur. Sentiment-wise, investors are now looking at the war story once again, tracking the oil price, right? So looking at our US trading stocks that we published yesterday, we got Johnson and Johnson stock code J&J. So the stock is experiencing a breakout at $265 dollar level. We can now expect the stock to travel towards the $280 dollar level on a strong momentum, followed by the next one is at 295. Now, if the counter to reverse, do watch out for the 250 level for the immediate support, as it could reverse the sentiment, right? And also, next we have ExxonMobil, stock code XOM. Look at charts now again. The stock, right, charted a high um, market structure to test and break out above the $140 dollar level. So if the stock to climb up higher, you could see that it might travel towards the 150 and also 160 for the second resistance. Now, if the stock to slide lower below the $130 dollar level, this could shift to a bearish trading bias uh, for now, right? And looking at the China A50 futures, well, it declined around 0.24% on Wednesday session, holding its support near 14 and 14,700 points level, despite booking early gains following the positive trade discussion between the uh, you know uh, Beijing and also the Netherlands on the microchip supply chain. Index momentum flattened out as the market participants selectively lock in profit ahead of highly anticipated the domestic consumer price and also the economic growth data. So sentiment-wise, market are still looking at the rebound move to happen at the 14,700 right here at this support level, and if the bullish momentum to hold firm. Right, so looking at our WTI crude oil futures, were exploded 3% over 3%, 3.5, 3.6% higher on Wednesday session, setting above the 73 uh, dollar per barrel as it locks its largest single day really over a month. So the massive, price spike was ignited directly by the US Trump uh, declaring at the NATO summit that the ceasefire memorandum for the MOU with Iran is officially over, immediately reigniting severe um, fears of the widespread energy supply disruption in the Strait of Hormuz. However, looking at the charts right now, it is pointing towards the 200-day SMA line, in which the price uh, uh, break above this level, we may see that the WTI to travel higher and may hit our stop loss level at $85 dollar level, right? And looking at our local market now, well, Bursa Malaysia, staged a late recovery yesterday on Wednesday session, with the KLCI gaining around marginal of 0.04%, close at 1683 points, and the FKLI raising around 0.3, declining by 0.3 percent, right? Um, well, reversing the earlier intraday losses of the KLCI, the local successfully bucked a sharp regional market sell-off as the late day institutional bargain hunting in the defense heavyweight cushioned the persistent weakness in the tech stock as well. So investors largely maintain a cautious stance ahead of the Bank Negara OPR uh, discussion and also the MPC meeting, which is today, right? Also, sentiment-wise, if the risk on to persist, market will be looking at the near election of Johor in the upcoming Saturday, together with the Negeri Sembilan election in another 2 to 3 weeks, right? So from here, if you look at the seasonality map, right, I can see that July is starting to pick up and a follow through of a momentum could happen in the upcoming month. So do note also that the August and September are usually the second best month for the FBM KLCI, backing gains on the 10-year average. Right, so if you look at the heat map right here, it's showing exactly how the KLCI is stretched out. It's minor 0.04% gains and the FLI um, you know uh, rose. So yeah, if you see here, the chart shows that the market was buying in the large cap financial pillars as well. And also a massive surge in the bad cam yesterday successfully neutralized the dip, widespread liquidation across the tech, manufacturing, and also the energy spaces. Looking at our Malaysia trading stocks, so today we have Ramsol Group. So the stock is on its breakout formation higher at 73-cent level on a strong volume. So with that, we expect the momentum to get bullish and the stock able to propel to test the next resistance at 78 cent level, and the second resistance is at 83 cent level. So if the stock to clear below this 68 cent level, this could reverse the course and trend lower. Next, we have Petronas Chemical or Petchem. So the stock is experiencing a breakout as well at 40 cent level. So if the stock to remain bullish, we expect the price to reach, to propel, to travel higher towards the 4.80 ringgit, followed by 5 ringgit and 20 cent level in the coming session, with a high volume as well. So do keep an eye at this 4 ringgit level or support level for any attempt of reversal. So today we have two breakout stocks for Malaysia market, which is Ramsong and also uh, Petronas Chemical, Petchem, right? Yeah, just to show you a bit. So we published hibiscus yesterday. So upon closing it, well, it's at our second resistance level of 2 ringgit. Also, if you see here, the indicator of MACD has crossed above the signal line in negative region, giving us a bullish signal that may push the market higher towards the second resistance of 2 ringgit and 15 cents. So let's monitor closely on this stocks, which is hibiscus. Also, not only that, so we noticed that the 99 speed might also have higher potential to move up higher, looking at the market structure or market pattern formation. Now we have, the double bottom formation coupled with the bullish cup and handle. If you notice here, right? Uh, uh, well, if we see also here, right, looking at the moving average line, it is now pointing higher, giving support to the price, and not only that, it is now indicating that the market is in overall bullish trend. Keep these two stocks, which is four stocks, Speedmart, Hibiscus, and also our trading stocks for today in your watch list, and let's monitor them closely. And lastly, looking at the FCPO, well, the FCPO future contract, but broader, double expectation on the Wednesday session, advancing by 1.36% to push back above the 4,500 level, while the soft long-term demand outlook still persists, right? The expected bullish momentum was triggered by the um, you know uh, uh, massive short covering as traders reacted to the El Nino weather disruption, and also aggressive regional biodiesel mandate rollout and the strong gains across the global rival oil market. So that's why we are looking at the towards the bearish downside, right? So, however, for now, we still keep our negative trading bias unchanged unless it breach above this 4,700 level. So, if the uh, bearish momentum, bearish sentiment to follow through, we expect the price to decline towards the 4,000. 4,390 and also 4,300 level, while our stop loss remains capped at 4,700 level. So that's all from me, and I pass the floor to John. Thanks everyone, and happy trading.
Hi, thank you, Aiman. Let me move on to results review note for Westport. We keep a buy call with a new target price of 7 ringgit and 49 cents from 6 ringgit and 55 cents. After raising our tariff assumption by 6% from 198 ringgit to 210. At this juncture, Westport is trading at their 5-year average PE of 15 times. Westport is expected to announce their second quarter results on 24th of July, and we forecast the core PATAMI to reach 280 to 320 million, which translates into a year-on-year growth of 20 to 40%. This is tracking toward a full year target of 1.3 billion, backed by higher container charges and a positive container growth. And despite the risk of a renewed fuel cost pressure following US President Trump's statement that the ceasefire with Iran has ended yesterday, our earnings forecasts have already factored in a 30% increase in the fuel cost as compared to the pre-war levels. That means as long as the Brent oil prices to stay below $90 per barrel, it still falls within our estimate. And also based on our sensitivity test, every $10 per barrel increase in the fuel cost will drag the earnings by roughly about 1%. On top of that, the fuel consumption is expected to ease by another 10% in the fourth quarter, following the deployment of 60 EV trucks by third quarter. And also, Westport are exempted from the AFM mechanism. Hence, there is no risk of rising electricity costs due to the Iran war. In terms of the outlook on their volume, Malaysia's export has expanded by 24% in the first 5 months of this year, despite the geopolitical uncertainties, pointing to a further upside to RHB Econ's full-year forecast of 15.3%. Hence, we believe the stronger export momentum to reinforce our positive view on the port operator, as the export growth should translate into a stronger container to fruit volume. In terms of the container charges, the value-added services VAS charges are expected to normalize in the second quarter following the resolution of the congestion back in January. And we believe the container volume growth will more than enough to offset the moderation in the VS charges. Like management has guided for a 3% year-on-year volume growth in April versus a 1% volume retraction in the first quarter. We therefore maintain our full-year volume growth forecast of 4.5%, which is still within management unchanged guidance of a low single-digit growth. Thank you for listening. That's all from me and our team. Happy trading and see you again tomorrow at Monica Pie.